So hello everyone guys, welcome back to my channel, and now I will tell you about the breakout structure and smart money concept. On the screen you can see the deal, what I opened, with using all the information what I will tell you next. So stay tuned and wait for the end of this video. And don't forget to subscribe my Telegram channel where I write my thoughts on the market, useful information about trading and post my trades. Have fun watching. By the end of this video we will discover the secret strategy what professional traders use to consistently beat the market. I will show you how breaking structure can lead to massive profits, and if you stay with me until the end, you will see real-time examples on actual charts what could change your trading game forever. Pattern break occurs when the market violates previous support or resistance levels. This signals what the current trend may be changing, which opens up opportunities for new traders. Both is used to determine the end of one trend and the beginning of another. This is the point at which most institutional investors and major market players begin to change their positions. When you see a structure break is the perfect time to look for new trades. For example, after a boss you can look for confirmation through candlestick patterns on the indicators to avoid getting caught in a false breakdown. So on the screen you can see the three types of breaking structure. You can determine it by three ways. The first method is you define your structure by candlestick body and structure breakdown by the candlestick body. In this example you can see how the breakout structure are determined by breaking by this candle, and in this situation you can determine what is breakout structure, and after that you could open a deal in a long. On the second example, it's definitely another way to determine breakout structure, because the structure determined by candlestick shadow, but structure breakdown are gonna be by the candlestick body. And don't mess it with fake breakout structure, because after the situation when the candlestick body breaks your previous high and forming another higher high, you need to be sure it is not fake breakout structure when the price rises on 3 more candles after the breaking high. I will show it on the other examples on the chart. And the third way how to determine breakout structure, and which I personally use because it is comfortable and easier, but not for new users. For example, here we can see the fake breakout structure because it's not forming the 3 candles after it, and after this situation the price go up and form it the true breakout structure. Next I will tell you how to avoid the traps or false structure breakdowns what often lead to lose money, what many traders makes. For example, here the prices are going in the bearish side is formed lower lows and lower highs, and all this movement where formed new lows or highs are called the breakout structure. But here we have a fake breakout structure because we are now forming of 3 candles and continuing of downtrend movement, and after that we are seeing how the price gets liquidity and formed 3 candles above our previous lower high and tested our Fuji, but common retail trader doesn't see these movements, and after that he will open downtrend positions for the trend continues, for example like that. But our price after breakout structure what we are mentioned and checking our Fuji are going up, and after that we can open a good deal with a good stop loss, for example like that. But don't forget to check our aspects of entry trade, for example capturing the liquidity, Fuji or D blocks and our things. So it was one of example of entering the deal. Here we see in our situations where the long movement are going to be break, here has high highs, high lows, and afterwards the price break our structure, form a 3 candles formation what are confirmed our breakout structure. And after that, after testing the Fuji or order block, is gonna be here's another situation with sideways movements when the price are breaking structure constantly, but you need to watch what were previous. For example, this situation it was upside trend movement, and after how the price captured the liquidity below and formed fake boss for beating up retail traders after change of character here and capture the liquidity, testing our Fuji, the price are gonna go up, and after the testing of our Fuji we are gonna place the deal with a good stop loss and a good risk ratio. Bearish movement it looks the same way. So guys, don't go to the chart and blind trade by my methods only after the backtest. Spend a lot of hours on the backtest to don't lose a lot of your money. So now we are gonna move to the chart and look for the good examples how to trade very good with this concept. All screenshots in good quality are gonna be in my Telegram channel. Follow it by the link in the comments, and don't forget to drop likes and write the comments about this video. So many traders make trades immediately after a structure breakdown without waiting for confirmation, which can lead to losses as the market may revert to the previous trend. Always wait for a confirmation signal or level retest to make sure that the structure break was real. And one thing what I forget to mention is always look on the higher time frames structure, because it's the most important thing. As the time frame higher, it is more important, because if you have a one structure on the 30-minute time frame, it can be downtrend in 4 hours on 1 day, and it will lead to this situation when the structure was breaking but the price go down. But here it is a good example, because on these meanings we have a break of structure, and after that the PVG formed from which you open a deal. But one more thing is to check the premium and discount market for opening a good deal, and here you will open a good deal from PVG after breaking the structure and capturing the lowest stability, the good risk ratio. So let's move to another example. Here we have the break of our structure here, and afterwards a good order block format, and you can open a good deal to the long position with the testing of our order block and capture the liquidity. Here good risk ratio, and the deal are going to be successful. The main mistake here is the retail traders are going to be opening the short positions after breaking these meanings, for example like that, after this candle, and dropping where stop loss on these meanings as in the technical analysis books, but we are gonna be created in the liquidity, but are gonna be liquidated by the smart money traders, and after that the price are gonna go down. So don't repeat these mistakes and trade by my concept. Of this example we can see a lot of breakable structure, for example here confirming of it, but here we don't have any point of interest to opening a short deal, and we don't make it. We are waiting for an hour break of structure for entering a long deal, because we have FVG here what are going to be tested, and after testing of our FVG we are waiting for breaking structure in long, and only after that we can open a deal from this candle, because it's grabbed a lot of liquidity on this side, and this formation are quite weak from which you could open the deal. After the testing it, it's FVG on the lower time frames, order block on the lower time frames, and our things in position are gonna be like that, or capturing this liquidity with a good risk ratio, and gonna be end just in 1 day. As the last example for today, here we have our market structure. We can determine our FVG, what are gonna be tested in some time. Here we have the lowest point of our bullish time frame, bullish structure, and the lowest what are gonna be break, and this happens, the price confirm it. Afterwards the price tests our FVG, what are a good signal for low positions, and after that is break structure here, the bullish movement, and after that here we can see our FVG what are formed to the higher time frames, and after that we can open a deal with a stop loss on the 50% on the or the conservative stop loss, and capturing the liquidity on our side, and here because a good risk ratio. So thank you guys for watching. Don't forget to follow my Telegram channel, drop your likes and the right comments about your experience of using breakout structure. Well, goodbye and see you in the next videos.